What's up, everybody? This is Lamine from investingsimplified.net. Today is Saturday, July 10th, 2021. Welcome to our weekend market analysis. Starting with the ES Daily, as we can see here, this is nothing but a confused market. Market has been chopped around for the past 5 days. We have an up day on Monday, Tuesday market went down, on Wednesday market popped, Thursday we had that over 1% decline into the open, reversed and recouped some of the losses into close, and Friday comes, we basically recover all the losses, made new all-time high and new closing high. However, coming into this week, this was never a surprise to us. As we have discussed in our previous videos, this leg up here, since market bottom back in June, our base case was this move was a bit overextended, and looking at some of our internal models, looking at RSI that we usually use on our analysis, were overbought, and our base case was market will either go sideways, which means it will just build momentum here, chop around, try to confuse and trap short-term traders. That's exactly what it did this week. It hasn't been anything but back and forth. So if you really want to trade this, you are looking for trouble. So our base case is consolidation, which has played out so far, and some of the overbought conditions on shorter time frame has worked off of. Our hope was market S&P to come down and test this breakout level, which is around 4250 to 4230, up to the 50-day moving average 4214.75. Market never get to that level, so we never had the opportunity to initiate any trade. However, going into next week, our strategy remained the same. If this consolidation resolves to the upside, expect market to move to our upper target. However, if for some reason we have some negative catalyst or positive catalyst that might cause market to push lower, because look at bad news as good news for market and good news as bad news for market. So we are paying close attention here. Any pullback between 4214.75 to 4250 on the futures market, we will definitely be comfortable taking risk and expect S&P to run towards this trend line, hopefully by September. In the event we are wrong, we will be managing risk. There are key levels that we will identify that we will definitely pull the plug in the event we happen to be wrong. Volume was pretty decent on Thursday, although Friday volume was not as high as Thursday's volume, but that's normal. Usually when market is going down, volume tends to pick up to the downside and then normalize a bit as markets start to grind higher. So this is our key levels we are monitoring into next week. Let's jump to NQ and see where the key levels are. Looking at the daily time scale of NQ, this is the Nasdaq 100. As we can see, the slope for this leg compared to the slope for S&P, this one is a bit more extended and a little bit steeper compared to S&P 500, and that's the reason why we have been a little bit cautious on the market this week and last week. Our base case was market potentially go into consolidation because of the tech weighting on the overall market, because whichever way tech goes tends to pull the overall market into the direction because of their weighting. So NQ, our hope was to see NQ pulling back to this 14,050 level. However, we still haven't gotten it. We're patiently waiting. There's a possibility this market can continue to consolidate here, and if that consolidation continue into next week, any breakout to the upside, expect market to come and test this trend line. So which means the likelihood of pull back into this zone, we might not get that right away. Probably will hit this target first and ultimately roll over and potentially come down to this lower trend line. So we are monitoring the market development on a daily basis to see which way market wants to go. Any pullback into the 14,050 level to about 13,894, the 50-day moving average, we think is an opportunity. However, because of seasonality effect for tech sector, tech tends to run pretty decently between this period up to about September. So as far as market pulling back to this 14,050 level to 13,894 might not be very likely. The probability of that might be pretty low. However, taking risk here, the risk reward from our perspective is not really there, because if you go along here, where do you put your stops? Your stops are all the way down here, and your potential profit is only about 3%. So I don't want to risk 3% with my potential losses of 3.5 to 4%. To me, that's not justified. So that's the reason since we got out of our QQQ on the 28th, we are patiently waiting. If market tag this trend line, we'll be happy to go short and expect market to drop to this trend line between September and October. So that's what we are seeing on NQ. Volume was pretty decent, almost the same as NQ, because this market, they tend to track each other almost the same. So let's jump to the dollar index and interest rates. All right, looking at King Dollar here, as we have been discussing for the past few weeks in our video weekly analysis, this was the trend line we have been paying attention to. It got tagged 1, 2, 3. This is the fourth time. On our base case, if you look at our previous videos, our analysis indicated that 92.50, if dollar cannot get above this level, the likelihood of a pullback or consolidation here is going to be very likely. And thus far, that's what is playing out. However, the 91.50 is still a key support level. If market happen to break that level and break the 200-day, that open doors to more downside. We are also paying attention to seasonality effect for dollar. Between July and up to September, dollar tends to weaken. So we are expecting some kind of a bottom in the dollar sometimes early September. If seasonality is going to play out, we don't know. However, thus far it is. Because last 2 days, just looking at seasonality trend, dollar was supposed to peak 2-3 days ago, and the last couple of days we have been seeing a pullback. The first key support level is 91.50 to this 200-day moving average. Any break there, expect dollar to continue to go lower, which should benefit commodities like gold, silver, copper, crude oil, and emerging markets. So we'll see if dollar is going to find support at 91.50 and bounce, or if it's going to break. Our expectation is a potential breakdown and then find some kind of a bottom sometimes early September, and that should, any move higher, market should break this trend line at that point. Where that trend line comes, we will assess once market get to the trend line at that point in time. RSI has been diverging with price. As you can see here, price was making higher high, RSI was making lower high, indicating to us that there's no momentum behind this most recent move. Therefore, potential pullback is more likely. Thus far, that's exactly what market is doing. So with that, let's jump to TNX. All right, looking at TNX, this is the US 10-year Treasury note. As we identified this key level 1.45 to about 1.43 in our 2 weeks ago video, indicating that any potential breakdown here, we will look for a back test, and if the back test fails, if market roll over and start to take these key levels out that we identify here, the 38.2% fib level, which is right around the 1.285, and the 200-day, which is right around the 1.24 level, something is definitely wrong in the economy, and the bond market is sniffing it out. So the first part of the equation is resolved. We got the breakdown. Market found support on Thursday right at the 38.2% fib level. On Friday, we got this decent move, about 3-4% move, heading towards the 1.43, 1.45. That will be very critical. Next week, if 10-year notes comes and tag this breakdown level, if it cannot get above it and start to move higher, for whatever reason, if markets start to roll over, that will be very negative in our humble opinion, especially if this support zone between 1.24 and 1.29 get taken out. That will indicate to us that the trend has shifted from up to down, and we have a confirmed downtrend, which means rates, the likelihood will continue to go lower, which means something is definitely wrong in the economy. And if we look at the euro dollar futures, which is based off of LIBOR, it has sent us the signal since December of 2020. It got inverted. So that tells us that we need to be paying attention here going into year end. There could be some potential issues out there that market is trying to figure out. However, the bond market is already sniffing that out. Looking at seasonality for bond market indicated to us that we should expect some negative price move in TNX until sometimes early September. So If seasonality plays out, our expectation is rates should bottom sometimes early September and start to move higher, and the dollar should bottom sometimes in September and start to move higher. So if both of them move in the same direction, the asset class that will be most significantly impacted would be gold and silver. Because if rates go up, dollar goes up, that's a double whammy for metal. However, rates rising is good for cyclicals, but not so great for tech. So it could be a tug of war between September, October, November as rates bottom and dollar bottoms. We will continue to monitor the development and see what happens as we approach that time frame. But thus far, next week is going to be very critical. We have CPI coming out on Tuesday. We will keep an eye on that if that's going to cause rates to go even higher here and potentially get above this breakdown level. If rates get above this breakdown level, I'll say, okay, things probably should continue to play out and the economy might be okay. Looking at RSI, it hit the oversold zone right around 30, bounced last couple of days, so we'll keep an eye on that. If market roll over, we'll pay attention to if any potential negative divergence is going to play out. So with that, we'll end the review here. If you enjoyed the video, give us a like, subscribe, share with friends, and please note anything stated here is our opinion and it's not a recommendation to buy or sell any security. If you want to get more of this analysis, you can subscribe to our premium content at investingsimplified.net. So with that, hope you all have a great weekend. Bye for now.